share my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, there's been so much carnage going on in markets, I thought I needed to communicate beyond the Substack letter. So let's get into tonight's video. There's quite a bit to talk about. Well, welcome everyone. We'll get the room to fill up, but let's talk about a couple things. I wanted to come live. I was just watching the markets trade, watching Bitcoin coming apart, the relentless selling that started around the London opening, just actually about an hour before the London opening last night, and it was relentless. The sellers were in control big time. And a lot of this that's going on right now, there's a lot of AI bubble talk, all kinds of things. So a couple of things. I'm going to start with Bitcoin. I'm not like a crypto expert. I'll put that out there. But I've been talking about something for a while. And those of you who've been around the channel, I know I haven't been on a whole lot in the last several months. But when I am talking about it, and also in the newsletter, in the Substack newsletter, I have been discussing something that I think it's been one of the biggest mistakes, is trying to legitimize the entire Bitcoin, make it mainstream. And I think that's a lot of things that go mainstream, it doesn't work out real well. And I think one of the issues that I'm seeing here is, I've talked about this, bringing in the market makers, the ETF guys, all kinds of, that brings in elements of selling and all the arbitrageurs and market makers and everybody that hangs around that environment. I'm like, don't invite these guys into this party. And so, you can see we did get a bit of a burst after some of these things happened. But I was talking to a friend earlier, and it's like, this has got to be the only investment based on scarcity. Like, there's only so much, there's never going to be more. Somehow, because of that, it's always going to go up. That's the way it's going to work. There's only so much real estate, and that's been an argument for real estate investment is all. And we've seen lots of these types of movements that are, 50, 40% drops, and even more in some areas with real estate. But let's just talk about Bitcoin becoming somewhat almost as a currency, very wide adopted. If you look at the history of currencies, it's not pretty. And just because you're spreading it out and you got incremental, shares basically that you can buy it in increments, and it gets spread out so thin, that doesn't mean it's going to go up because everybody can only buy. That's what, if that's the case, look at what we've seen here since we printed a new high. And I know those of you that get the Substack letter, kendallreport.substack.com, there is a free day, 7-day free trial there. But the point here is that everybody thinks that adoption equals higher prices. And I have, as usual, I have a bit of a different take on this, is that the adoption is actually the problem that's happening here right now. So you're bringing in all of the wrong people, in my opinion. The whole independence of Bitcoin and what it was based on is just being washed away. You got government regulatory coming in, you've got banks, you got all of these folks. And in the end, it's just going to look like every other risk asset to a point. And I think that's what we're seeing here. I've been talking about the structural issues with the charts. I'm a chartist, a quant, so I see things through that lens. And I think that the main thing that I'm really focused on right now is just that structure. And I'll show you, we'll go through it. I just wanted to set this up. I'm going to try to get through the equity markets. We're going to tie in some, and I'm going to solicit some stocks, but we'll go through NVIDIA, we'll go through some stuff. I'll get through this as fast as I can. But this Bitcoin situation is very interesting. I think we probably get a bounce somewhere. I think we're still trading right around 100,000. There was somebody I saw a number a couple of months ago that Bitcoin will never go under 100,000 ever again. Well, it just did today, and I don't think it's done yet. But the whole theory of the adoption, I think that's one of the biggest issues, just because it's spreading everything out too much. And I also think, all of the shit coins and all of the altcoins out there have sucked a lot of liquidity out of the market. And there's another premise that Bitcoin operates on, is that you have these LTHs, the long-term holders, right? These guys are hodling, they're never, ever going to get out. Well, if that breaks, otherwise the confidence in that, let's say the market, Bitcoin goes to 70, this is hypothetical, goes to 70,000 or less from right here. What happens to Michael Saylor? What happens to all of these? I look at MicroStrategy more as a kind of it's not really a business model, it's more of a Ponzi scheme in a way, on what they're doing. And I think if you wash out Michael Saylor and he gets hammered so bad that he's stepping away, then you can buy Bitcoin and it will go to 250. What's his name? Tom Lee, another puppet for the media, for the financial media. He's still throwing out really stupid things. I mean, the guy, he was never ever been a good equity manager ever. But he's been on, he's just one of those perpetual bulls. And, I find him very annoying from the standpoint of the things he said. Of course, because he's saying it's going to 250, everybody that's a Bitcoin influencer or whatever is, spouting any words he says. So I got concerned when you got the Trump bros, all three of them throwing around, buy crypto. You got Michael Saylor doing a book tour, basically talking about this stuff. And I've been very concerned, and I'm watching the charts and these distribution patterns that have been unfolding. But I think there's more in-depth stuff I'll talk about. I'll try to bring it up, and I'll be able to do a better job and a better focused job, maybe bringing it up in Substack. So we'll do that. So let's move on. And I just wanted to set up some things because that seems to be probably one of the biggest things on everybody's mind, or a lot of chatter on X anyway. So let's talk about equity markets. There's something that I was preaching for all year, and I've kind of backtracked a little bit. Mainly, we'll go through the database here in a minute, mainly because of how the WaveTech database is set up. We got a lot more traction on the intermediate models than I thought we would, but we got well over, I think, 74%, which is what I call fully invested. And the metrics of that, and I'll go through more detail, is that tends to have a forward-looking element that will push us down the trail a little bit. But I think there's another element we need to talk about here, which is we're at all-time highs. I see people going, it's a bull market. We just made an all-time high, 3 days ago, 5 days ago, last week, 2 weeks ago, as if the all-time high is some element that perpetuates a bull market. I always say every time you make an all-time high, the closer it is to an all-time high, meaning that each step that you go, one of those is going to be the top. And I don't think we're there yet. I talked about this when I did the Fed coverage, during Powell's Fed conference the other day, I guess week before last. We're just looking at these patterns that are setting up that are starting to look more and more like setting up some distribution tops of some sort. So there's that element, and then you just got the government shutdown. So I'm going to do a general overview. The database should be updated and running just in a couple minutes. I just spot checked it so I can get the daily model update for today, so I can talk about that, carry the database in. But the bottom line is we're starting to see some things that are just getting too crazy. And it doesn't mean that I'm calling a major top, but sometimes these minor tops start to look more and more, they turn into something bigger. So sometimes you can make a call, there's a big reversal, And we have had some elements that look pretty close to what I would call a top forming at this time. And I think I was talking about, I think it was on a tweet, not sure, maybe it was on Substack, that was talking about these this inverted V top. Well, it didn't play out perfectly, but since that event happened, it wasn't the perfect, all the indicators lined up at once, but it was a V top. And since then, we're starting to see some pressure. I just watched the market print a new low for the night just a minute ago, so we're down 0.5% more right now as we speak. So we're still getting lots of selling pressure, and folks are getting really nervous, and I think they should be. And depending on how you're approaching the markets, if you're using WaveTech, you probably, even in these all-time highs, you have 20-30% cash on the books. And I think that will build as we go through the week. So let me get over here and see if I can get to one more thing here and bring up let me just check the database real quick to see where we are here. Yeah, pretty good run. It's ready. So let's go over and take a look at that. So as we look at if you're new to the channel, so we're still 71.29. I'm hoping that there might be a couple updates here, but we had, after today's sell, we had basically 3,350 sell signals, very little buying going on. We're starting to see things roll over, and this is the weekly database. So let me click it over. That's not the right numbers. Apologize. All right, here we go. All right, so we are down to 24% long on the daily, and we had 3,300 sells, but the percent bullish now is at 24%, and at this level below 22 we go into full liquidation mode. And what does that mean? That means that the database is probably going to drop into 12% or 10% on a short-term basis. And what that really does for us is it puts a lot of pressure on the downside in the short term, but as we come into Friday and we get an update on the intermediate, we should start to see some liquidation there. And but that database is still at 71% bullish. But this is a pretty good sign that we've got not a lot of traction that we're going to get as far as support for the markets. And I mentioned, I think in a tweet, I'm not sure where some of these are, even last night's newsletter and the Substack, is that we're probably going to see, at least, it seemed like a long ways away when I said it last night, 67 handle, maybe 65. Well, we're 67, 61. We're like 5 ticks off the low of the session right now. So these things are absolutely already happening. We'll go through the algorithms. We'll maybe look at get a list. Don't post them yet on the chat line, but let's get a few of these AI stocks to take a look at, and maybe look at some of the ETFs that represent those groups. And I'm going to depend on you folks to give me the symbols, and we'll do analysis real time here in just a few minutes. But bottom line is, and this is the other thing I do have a note here that I wanted to discuss, and I'm going to go back to the intermediate models right now. And one of the things that happened for this week, which I thought was interesting, let me see if I can get something to pop up here. So this here is the index. So we've been long this index over here, and I'll give you the exact date here in a minute. But we've been long this index from for a long time. This is the utility, and I've been talking about this is the main driver. What do we need right now? Energy, electric, hydropower, anything you can get your hands on, right? Doesn't matter. So hydrocarbons, all that. I don't believe there's fossil fuels. I'm one of those guys. That'd be a lot of dead dinosaurs. They're pumping more than they've ever pumped. But anyway, what we had was this was, I think, a signal that maybe we're starting to peak out on, at least on the returns that they're getting on the utility stocks. This used to be a joke index. This thing went from 28 to 42. This is a monster move on as far as this goes. Hang on. Yeah, so that's off the list on the intermediate. So to me, that was a warning sign. I don't think I brought it up on the Substack. I'm getting back. Some of you know I just went through a big family issue, so I'm getting back. Okay, so there'll be more of these impromptus, and then there'll be a defined schedule as we go forward. Of course, we're also coming into year end and the holidays and all that, so it's going to get interesting. But the bottom line is that the utilities dropping off is telling us something, and and we're going to go into AI in a minute. I'll bring up the S&P and the NASDAQ, and then I think we go into some individual stocks and look at NVIDIA and some other things. But I think this is, maybe we'll call it a warning sign, but there's a sign that we're starting to see that index on the utilities, and this is a custom index that is just unique to this platform. But when that starts to roll over, possibly we're going to see some contraction there. And where we are in the AI, and I'll just mention this in a minute, my opinion, is that we're still in the infrastructure build-out phase of AI. I don't think we're anywhere close to actually having being frothy in a bubble stage. We're still building the inventory. Maybe the build-out is getting a little frothy, but ultimately it's the ROI on all of the build-out. Otherwise, what that new capacity is going to bring to the economy and to society and all of that. So we're at the beginning phases of the AI build out, and you look at the deals that Trump put together with Saudi in the Middle East and all this stuff. Most of it is trillions of dollars going into basically the build out of this, and it's going to take a year and a half. So 26, maybe 27 is when some of this starts to play out. Good news is we're at year end. In December, I'll be writing my annual outlook. And I would even go back, I think it's pinned on the Substack account. So kendallreport.substack.com. If you sign up for a free account, I think it's pinned at the top, the 25 outlook. I think I have it so you can see the 24 because it's been interesting. And as it stands at the moment, we've had 3 years of double-digit returns in the equity markets, which is pretty phenomenal. Last time I've seen anything like this was back in the Reagan years, and I think we had 6 years from 5 years, 81 through 86, coming into the 87 crash. So I'm not talking crash, I'm not talking bubbles here at the moment, but I am seeing some frothiness coming in, and we'll kind of set this up as we go through it. But the database, short term, is telling a story. Basically, it's at 24%, and lots of selling coming in for tomorrow morning. And so, yeah, we just bounced. We just made a new low on the session just a few minutes ago. We're printing 3 ticks off the lows right now. So a lot of selling pressure. Sellers are in complete control right now. And looking at some of the some of the machine trading and the algos were definitely are controlling everything. And I haven't been watching the order book real close, but I was seeing a lot of algo trading coming in last night and the sell-off. So the machines were running, they had all the switches on and they were all on sell. So let's go ahead and come over here and let's start looking at some charts. And I think a couple of things I mentioned probably in Substack, since that's been my main communication, is that we could see 7,100 by year end. That's coming in a little question, and that was this first Fibonacci target here. Let me just bring that up. That was if you look over on the far left, you can see, yeah, so 71.50, and we got up, I think the highest that we got up to is 69.53, I think was the high here. Let me double check. Yeah, 53. So 953 was the top here so far. Now we're coming down into some of the areas. I thought it would take a little bit longer, but it's moving pretty quick as we're coming down towards that 40 period moving average, which is putting us pretty close to, let me just get that number over here. 67.45. So we're basically 10 handles off printing this level, and if we're looking at this daily 40, that's going to be I'm going to flip over to a weekly chart for a second. And the weekly chart, that's going to be right on the 10-week moving average. Let me change the scaling a little bit. So this vertical line here, and I talked about this on the long-term outlook. I think I went through this on Fed Day, but we're coming right into those values now. 68, I believe that's 97 is that where it is. So we're actually trading below that 10 period moving average right now. But you can see the vertical formation here, but this is what is going to get interesting. We never, after the April 2nd lows, and this is a really important thing I'm about to bring up, after the April 2nd low, this big rally, and by the way, it's like 40% rally. You know, I see people talking about, we're going to get I saw some guy in Bloomberg and they were touting it as, he said, sometime in the next 12 to 24 months, we'll have a 10% correction. Well, we had a 20% correction in the first quarter of this year and a 40% rally. No one's talking about much about the 40% rally, right? It's typical Wall Street buy and hold pie chart mentality. But what they're talking about here is, you know, that we're going to have a 10% correction. Well, that's nothing anymore. The volatility levels are so high that that's not even a thing to talk about. The old metrics of Wall Street of, you know, 10% correction, 20%, you know, bear market. I've always hated that. It's just the stupidest thing. Typically, when you get down 20%, that's the bottom, not the beginning or bear market. That's the end of the decline. That was the case earlier this year. But the bottom line is, if we're still in that, something I talked about on the Fed meeting days, we're still in that trend maintenance mode, which tells you we should hold right around these levels where we are right now. We could dip down to like 6,500. That would put us pretty close to the 21, 65.10 is the 21 week moving average. So weekly chart I've got up here right now. So those are parameters that we're likely to hold on to from the standpoint of where the support levels are going to be. So we're maybe halfway there to the full correction or whatever you want to call this. I'm not that big on labels, but like I said, just showed you, WaveTech short term is already in full liquidation mode, trying to go to the next level, which would be under 22%. It's 24. With the way we're trading right now, I wouldn't be surprised if we're there tomorrow or below it. So we're seeing, already saw the short term come into play and all this stuff that's going on. And it's this is not, by the way, we could go back and research them. Let me see if I can pull something over here. Yeah, so if we looked at, we'll go back to 2020 just for a minute. In January of 2020, the WaveTech models were just puking out stocks like crazy. You guys didn't know me at that point in time. You met me probably about 6-8 weeks later, a lot of the retail folks that are on this channel now. But the bottom line is, we were already signaling there was a decline coming. There was no, if you recall, this number right here where my cursor is right now, that was an all-time high. And, everybody was basically bullish. So I'm getting calls from our advisor group, and they're going, hey, we're getting a lot of sells. What's going on? I'm like, just follow it. We've been in this big cycle going from September 19th up to February of 20. So we had that big run. But even if I go back further, we go all the way back to 2020. This was all one big run. And so we were in this elongated situation. Well, what's interesting about this is we're in another one of those runs. So at some stage, one of these levels will be a top. But if we look back and see what the indicators looked like then, they hadn't made a new high. There was massive divergences during this period of time. We were making new highs, but we weren't gaining any momentum. So that was a warning sign. And then when it started to roll over, it rolled over steeply. Of course, they turned off the economy and then turned it back on, right? And so this elongated move from 2020 all the way up into the 22 highs, and we get 23 correction, and then we get 24, and I guess we'll call it October of 23 is where the market bottomed, and it's been straight up ever since for the most part. We had this little dip here with the we'll call it tariff tantrum. But after that, it's just completely recovered and went up. And I wasn't on board with this V bottom, but if we look at these two Vs, which would be, let me just zoom in here. This was the 2020 V, and then we had this one, which is almost very similar, but we went right down. This is, I believe, is this a weekly chart? Yeah, weekly chart. So this is actually, this trend doesn't appear like it wants to go away. I went through a big scenario about how the indicators look and that they're in this elongated pattern. So I'm not looking for any major top here. I want to make that clear. I do think there's some short-term risk, and we'll talk more. I plan on getting back on YouTube here more than I have been, so I'll try to keep to that if things get too crazy. I always used to promise if there was a crazy element that came into the market that I would light the screens up and talk about it. So I'm not quite back fully, and so we'll just do our best, and it's nice to be back on doing this. But you can see that the forecasts, these dotted lines are the forecasts of the machine learning, and this is the dotted lines down here are forecasting the stability, and that's these numbers down here are guiding those WTR. Those same forecasts are working together. So this is what it looks like in prices, and this is what it looks like in momentum. So it looks like steady positive momentum, and I believe this center dotted line right where I have this right now is the zero line. So we're looking at positive momentum, and this carries us on. If I go over here, this is forecasting out to February of 27. All of this is going to change, but this is something to guide at least the vision of where things are likely to go. So I'm still in here. I still think that as we come into first quarter of 26, we'll see things stabilize. One day they'll get the government back open and go from there. So let's do NASDAQ, and then we'll do some stocks and stuff. Okay, I see everybody's throwing up some names already, but just give me another minute to get through that. Yeah, so I'll stay on the weekly for the moment, and this is basically a similar pattern. It's got a little softness that's coming up, but the same trend maintenance mode, all of that stuff that I talked about on Wednesday of the Fed, and then the patterns are going to change. This is weekly. This is going to be like watching grass grow a little bit because each bar is a week. But let's go over to the short term. I thought it was interesting, and I saw somebody on Discord make a reference to this. But the data sheet that came out last night, I was shocked when I was running the sheets, and I've run the S&P. I'll bring that up here once I cover this. I just remembered I did run this. But the NASDAQ was screaming at us that it was there was going to be a big rebound. In fact, it was a bullish sheet that came out. I ran them fairly late. It was right around the London Open last night when I ran those sheets, and it was impressive because we got a pretty big bounce. There was a really nice trade off of there, and the trade was suggested on the sheet. Let me look at something here real quick. Yeah, I'll see if I can blow this up. This is what was amazing me. This was last night's sheet, is right here, pull back to support zone. It said that was going to happen, but here's a directional analysis. It was screaming, look at this, 65% bullish pullback entry. So it had you coming in on around S3 STX was, I think, perfect. And it was a screaming buy off of there. And it was interesting. That momentum direction was positive but weakening. And so those of you that may not be familiar with these sheets, these go out in the Substack every night. I've increased the font size. Something happened with Claude. My original sheets kind of got shifted around off of the script that I've been running for about 6 months. So I'm trying to recover from when they brought out Sonnet 4.5. Sometimes these models will just start hallucinating and not even being able to do clear instructions. It's pretty frustrating. But this was what came out last night. So when we look at this, that was pretty fascinating. We'll go ahead and do the analysis here on a daily, but we're looking at right now the potential for a decline, we'll say into a week Friday. So into the 14th, we do have the 40-day moving average coming in here as support, but momentum is turning south on us pretty hard. And that's going to keep the markets sandwiched in here. So it's been a while since I talked about it, but this is a classic. Hang on. I'm going to have to do it a different way. I'll draw this in so you can see this stuff. But there's a little wedge building here, and instead of drawing trend lines, I use moving averages as trend lines because I don't draw them. But there's a little wedge, and I think we're going to stay within this wedge here. So you get the downward sloping 10-period moving average. You get down here, you see the algos are projecting more downward pressure, so that means that's going to be your resistance zone. And on the 40 below it, let's see if I can get to it. Yeah, the 40 below it, we're still, even though we're seeing it break through the PPM and the dotted lines declining, what it's doing in this case is we're still at a positive 1.4, where the PPM that's 2, PPM 1 is faded below 0.15. So that this tells us that we're basically still got some negative influence coming on the downside and bullish or support on the downside. So your levels to watch is just a simple 40-day moving average and a 10-day moving average, and we should trade within there. I wouldn't be surprised that we bounce somewhere out of here. We've printed on the S&P here, it looks like 67.48, and so the numbers that I talked about a minute ago, I think we'll see potentially down to 65, but we could get a short-term bounce from here. Yeah, just seeing a comment. Crypto markets, old guys that bought under a dollar are finally selling. Yeah, and that's what I was talking about, the LTH, the long-term holders, right? Those guys, if they change their attitude towards the markets or the whole, and let's say 20% of the long-term holders sell, it's funny, like I said in my opening comments, and we'll go through Bitcoin in a minute, but that's the issue, is that people act as if those guys aren't going to sell. And there was even rumors, 6 weeks ago, that Saylor was selling a bunch of stuff. So these, don't be gaslit by these guys. But anyway, let's go ahead and clean this up. And let's go ahead and see if we can embrace and look at some of these. I'll just start with NVIDIA, okay? And I want to keep with a theme. So I see Amazon and just regular stocks. The only thing I want for you to put up there is maybe some of the ETFs that are out there that are focused. Let's just stay focused on the AI situation for a minute, okay? I think that I want to keep that theme. So I don't want to deviate from that. But let's take a look here. But we're going to go out to dailies. A little noisy, but I want to look at the algos here, and they're showing us that we haven't broke down yet, and there's still positive upward momentum. So around the 10-day moving average is where you're going to find support, and we've been seeing this thing build up here, and you can see we have three Fibonacci targets here: 208, 220, and 227. So we hit the 208s. We've hit that. So there's two more fib targets, 220, 227, and folks are throwing around numbers like the very first support we're at right now is 189, 190 we'll call it, and that's rising. And it's rising at a very substantial rate of change here at 0.90, which is just under 1% per day. So that thing is screaming. So if you see the 10, you're a trader on NVIDIA, you want to trade off of those values. Somewhere right around the 10-day simple moving average, you'd be able to buy them for a trade. It's possible. It looks to me that the algos are trying to roll over, but it's a slow roll. So don't be fooled if you have the indicators and you're using them. Just because we start to cross over the first derivative, all that's telling you is that you're going to test that PPM1 is centered on the 10-day moving average, that you're going to test a 10. It doesn't necessarily mean that it will break through it. If you break through the second derivative, then the probabilities go higher that you'll trade through that 10-period moving average. Right now, expectations is that we will hold that level, right? So that's 195. So people are screaming if it goes under 200, just because it's a round number, I guess, that somehow that's going to be the trigger. I would say it's a trap. You'll probably be able to buy it just under, somewhere between 200 and 195 for a bounce back into the pattern. So I don't think we're looking at this massive rollover that it's just going to collapse, even though we're seeing some pretty good selling coming in, certainly in the last few days, right? And who knows where this government shutdown goes. There's no way to predict that. I actually think markets and everything seems to be doing pretty good without all the crud and reports to watch every day and try to figure out what the influence is. It's nice having at least that influence out, and now we're pretty much on earnings, which I was talking about 35 days ago when we were going out. I said we'll be focused on the earnings and all that. Let's go back to weekly here for just a second. So this is the other element I want to bring in. The algos, the red dots, are predicting that we're going to go sideways into the 10, but the 10 is rallying. So 195 is multiple weeks out where that is going to be. So that 195 is a pretty good number in my idea. Yeah, so somebody's saying Head and Shoulders. I don't even know what that is. I've joked that there's only been two Head and Shoulders ever, ever in history. Yeah, I just I'm gonna be doing. I'm gonna start a new channel so you folks know, and I'll let you know when it's ready. But I'm gonna start an educational channel, and the first thing I'll do is debunk all the Head and Shoulders and flags and all that junk that uh, people actually, some of the younger, we'll say younger traders, and have read Edwards and McGee and some of this classical technical stuff and thinks it's the Bible. That stuff has never worked. People have been losing money on that since it was written in 1940. It's laughable to me that a trend line or a little formation like that, um, and I've just built other metrics that made sense and that were tested over the years. But yeah, you don't hear me talking about trend lines, and you don't hear me talking about those kind of patterns because my first experience with it was probably just like you, that wasn't really a Head and Shoulders, it wasn't this, wasn't that. So I kind of developed my own language out of not out of theory but out of research, and I used to joke that it takes about $1 million to figure out how to trade. So you got to go through your first million. You got to go through a lot of money to learn and a lot of pain. And that's the only way it goes. And I try to, when I was building all the indicators and everything that I do, I was just trying to overcome all those issues. Everybody used moving averages, so we came up with this angle of attack theory. Won't go into it right now. But I'm going to put a channel together, and that channel is also going to be doing some podcasts with some friends of mine and some old technical traders. It's going to be fun when I get it all set up. So let's go ahead, keep rolling here. Where are we getting on time? 42 minutes. What else we got? Give me a good... Yeah, I'm just looking at a couple things. Let me look at a couple comments here while we're kind of... So I guess we could call Baba, since they've gotten into some AI here. Yeah, I haven't looked at this stock forever. And we've got weekly up here. So this thing looks like it's rolling over a little bit. It's got one of those formations I talk about, which I call the bubble formation, where you get the big spike in volatility. It's still kind of consolidating. You got an upward shaped 10 here. It's 1.8, so it's got serious momentum. You can trade off the 10. It looks like we got just under it, and it bounced pretty good. But this is more likely just going to flatten out, consolidate. We may see some weakness coming back into maybe the 21-week moving average. I'm going to stick to weeklies here. Yeah, so we're going to go right to Bitcoin after we do a few stocks. Bear with me. Okay. Yeah, Tesla works. Let's do Tesla real quick. I can tell you the day I can own Optimus robot, I'm getting one. So similar, we got this rising 10 here. Momentum starting to break down. It looks to me just about everything is starting to roll back. And we're starting to get what I would call, just kind of a corrective phase. Nothing like, not that it could be 10%. I don't know. Just that we're going to move back into these moving averages. We've got to normalize some of this momentum that's been out there. It's been a big run since April 2nd. And on Tesla here, we're seeing all of the algos are trying to get to the point where they're starting to roll over. All it's telling you, it doesn't tell you the way these indicators look, Just quick education on that. It's not telling you that it's going to roll over hard, that there's a big top coming, but it does tell you that once we cross that, we're going to challenge that 10-period moving average, which is right now 440. It looks like we're right on. Hang on, let me get the right number. 370 is that number. So we could trade down to 370 and then bounce. But it looks like a lot of these markets are trying to set up. We've got similar to the S&P. We had a fib target up here. We're looking at fib target at 490, and we got pretty close to that. What was this high here? Yeah, 450, 474. Just looking here. Yeah, so we got almost up to this first fib target. Same thing that we did on the S&P and the NASDAQ. Those first fib targets are, I call them, they're not exact. You don't have to hit the number to satisfy it, but you get that rejection off of there, and that's all we're looking at. We reject near that. That tells you when you get a bit of a reversal and a rejection that number has probably been satisfied. It doesn't have to print the exact number. If you live in a world where you have to have every number that you predict or something on an indicator like this, that it didn't hit that value, so it's still going to go up, you're going to get in trouble. When you see these things and you see the reaction, some kind of rejection or something off that number, then you got to pay a little closer attention. And everybody should be using kind of even a top-down or bottom-up type strategy where you're doing weekly, daily, and maybe going down to hourly or even a 4-hour chart's fine. Just to break down that increment so you can kind of zoom in on the microscope and see if there's patterns and things that are coming out of that time series. Lower, a shorter time series is good, especially if you're hitting intermediate targets or close to it. You want to try to fine tune it. That's one of the models I've been wanting to build for 25 years, is a model that was adaptive to time series. So right now I'm still doing that as a human, but that's one of my projects in the future, is to actually get something when it recognizes certain types of patterns that it changes the model from running on a weekly to maybe a daily or even down to 4 or 1 hour charts to fine tune exits or fine tune the pattern probabilities of continuing in a direction or not. And that's all we're doing all the time, folks. And I keep telling everybody, you get my indicators, I do it. I built models, so I didn't have to worry about the subjectivity of going, things feel so good, I really think it's going to hit that number anyway, so I'm going to hold. Then they take more of your profits along. I mentioned this, I think in a Twitter post. One of my buddies used to always say, never celebrate a trade, or otherwise, clap and feel smart when it's going in your direction. He goes, if you're doing that, you better be celebrating with an S. So you better sell something. You got to trick the market gods that they think that you're getting out, so the market can go up. You know how it is, right? You sell out of something and it pops, it goes next level, and you kind of slap yourself on the head and go, well, I knew it was doing that. I don't know why I sold, and you do all the self-talk. So you just have to try to do your best to try to keep the emotion out of there. And that's why I built models, so I didn't get involved. All of us are our worst enemies when we're trading, especially when we're doing discretionary trading. All right, so what else we got? Yeah, Todd, it would be incredibly cool, and I'm going to figure out how to do it. I have somebody that tells me that they think they can do it. We'll see. Yeah, I did talk about Tesla going bust. I love you guys, man. You guys, you like, oh, he said something 10 years ago, Um, yeah. So you probably should look at the updates. I have was on just with somebody. They were talking about Bitcoin and something I said around 108. Yeah, I guess I'm guilty. So if you look at any of the, I've seen this dude around, or whoever it is, Jay Mentor, I've seen you around before. But I did say that. There was a time when it looked like it. I wasn't the only one that said that. And Elon came up with some ingenious deal. I forget what happened. And they turned the stock around. So that hasn't been me for a while. It was relevant when I did say it. Let's see here. See what else you guys got. We'll do this, and we're going to go on. Yeah, I think I'm just looking through some of these comments, trying to. Yeah, I think gold will probably bottom here. Yeah, ARC isn't even a thing anymore. That's pretty funny. Let me see if I can bring this up. Is this the right stock? Ion Q, that's the quantum. Yeah, okay, thanks, Tom. Yeah, when he was buying all the chips. Yeah, so I was pretty negative. There was a pivot point, and this is where people on Tesla, just back to Tesla, were kind of yelling at me. There was a pivot point on the chart. If I see one, I'll bring it up if we run across something in a few minutes. But I said if it takes out this number, I don't remember the number right now, then Tesla's going on business. It actually never did trigger that point. So there was a big trigger that I use. It's generated from the Fibonacci, WaveTech Fibonacci targets, and that trigger never got triggered. But so, and when it reversed, called the first move to, like, I think 340, 380 pretty well. But yeah, I'm guilty as charged. I'm just, oops. Some of these symbols, is this TAO? Is this what you're talking about? This is weekly again. Let me go back to daily. There's not a lot of data on this stock. Bounced pretty good off of that. That's interesting. I'll bring up something. This quick little education. Whenever you see the market grid squeezing, I call it like the squeeze trade. When you see volatility going down and the market's going down, you typically it'll go the opposite direction of that. Same thing. I'm trying to find one where there's a squeeze top here, kind of here where it squeezes down, then the market goes down. This I'm not sure how liquid this stock is, but you see this pattern quite a bit. And oh, here's perfect. I'm glad I brought up this stock. These red dots right here, those are the pivots. So this is right now. Let me zoom out so we can get this. It's like a 25-cent stock, whatever it is we're looking at here. But let's take a look here. I'm just trying to find this. Find this one number here. Bear with me. Should be this one. So 27 cents. So this little red dot here. So I was talking about the pivot. This is what was on the bottom side of Tesla, if we get above 27, you'll test this high. That'll be a breakout point. So 27 on this stock, if I have the right stock that you tail on metals, I'm not sure if that's the right one. Yeah, I love hanging out with you guys, by the way. Okay. Yeah, sorry, I was hoping that you could see that. I've got, yeah, I see what you're talking about. Sorry about that. I didn't have my studio up in the right so I could see that. All right, let's go to Bitcoin. Bitcoin back over 100 here, bounced a little bit. What was the low here? 99.43. There's three Fibonacci targets here right now. They are 93,639. They generated over here when the market was at 111. We're getting targets of 93, 84, 79. I think I'm not predicting they're going to go there. I think we get a little bounce back in these moving averages, and we're going to find out if this low that we printed, we'll call it today, is going to be the low of this pattern. But look at this is one of the most concerning. Down at the very bottom here, this is the 200, the WaveTech 200. So it's tracking the 200. What it's telling us is that the 200 moving average is starting to roll down, which is telling you not only it hasn't yet, but it's forecasting that it's going to do that. If we see the 200 roll down, and that will be a ceiling for this market, and it will also tell you that we're going into a reasonably long-term downtrend. And if it were the case that we went to, what are we looking at? 84, doing round numbers here on the fib targets. So 93.6, 84.9, and 79, we'll call it 600. That would suggest that we could run down there. If we did that, some of those LTH, those long-term holders they're going to lose faith, I think. And you could get into a really interesting situation if it went down that MSTR or something like that really got hammered, where you get some liquidation. A lot of these companies that are borrowing, trying to emulate that strategy, may not have enough money, and could trigger a lot of things that people aren't thinking about. And that was kind of my take when I was going on earlier. Yeah, so, MSTR, I'm just looking at a couple of notes I have here. It could end up to be a forced seller due to collateral stress, or even if it's perceived to be under collateral stress, that could be pretty ugly, and start to trigger a lot more emotion. So, like I said in the opening, if you weren't here, is that the possibilities of Bitcoin going down are always there. The only thing, the premise is the LTH is long-term holders, that they're going to hold forever. So there's only so much float going on, and that will be true to a point. But if you start to challenge some of these things, or you get something like Mister and you get them into stress mode on some of their loans, that could trigger, a total panic. And then the LTHers, we'll call them the long-term holders, will start to liquidate as well. And they'll just go, I'll buy in later. Somebody made a comment, the guys that are in at $30, right? Those guys are selling now. So I'm just looking at some notes I put together earlier. Yeah, so there's been rumors about probably over $1.5 billion has flowed out of Bitcoin. And, you know, I talked about this, and I'll just read in case you weren't watching earlier. The adoption trade, where everybody thinks just because it's getting into mainstream and ETFs and all that, this brings in, I've been yelling about this since it's all been happening, and when it was talked about when we're going to get our first ETF, is that this is not a good thing. Those are the guys, I used to work in big institutional desk, and those are the guys, you don't want them hanging around because they're going to find little places to exploit the areas. They're going to be sellers more than buyers ever on those desks, working flow in and out of the ETFs. There's a lot of things you can do as a market maker if you got order flow and some things, and you got the collateral over there. There's some pretty sophisticated things that you can do there, and most of those things will cause downward pressure in whatever it is. I don't care if it's Bitcoin or gold or Tesla, doesn't matter. Especially a concentrated holding in a lot of ETFs and things like that. So you can get into some pretty sketch areas on how these markets are going to trade, just from the standpoint that you're going to have these other players involved. And then you bring in the governments, the government regulators, the banks, what they call it, the Genius Act, all of these things. These are not, in my opinion, are not positive things for Bitcoin and for crypto. And it feels like it. What is that? I forget. There's 40. I know there's some big number. It might be 4.2 million, but there's like 42,000 shit coins and altcoins out there. They are also diluting the liquidity to a point. And if you start getting general liquidation, they're getting in trouble. And the altcoins are going to sell Bitcoin to cover. There's some spreading going on. There's a whole lot of stuff. It's a big market. I mean, you're looking at a market that's bigger than the stock market and number of things to look at and to trade. And grant you that all of the altcoins don't add into that much, but they do distract and can cause other issues. So I think that's what we're seeing here in this chart. I've argued going all the way back here into July, this entire section that I'm pointing at, this a daily Bitcoin, has been a distribution top. And this last, look at this last move up to 26. I want you to just kind of, the targets, see if I can get it so we can get it here. Targets 126,961, 126,272. Yeah, so the actual high was 120. I'm just trying to find that. 126,272. Fib target 126,961. 126,961. Yeah. So we're looking. That was like exact hit on that fib target. Rejected off. And here's the thing I was talking to you about a minute ago. If we look at the 200, the WaveTech 200, this thing was breaking down, giving you that signal that the 200 was rolling over. And it's still rising because the value is positive. See if I can blow this up, make sure you can see it. The value is still positive here. It's at 0.12. This thing never gets over, I think, like 0.20 is screaming. But the point is here that we're seeing this start to fade, and it's being projected. If I come over here, it's being projected to be a negative 0.02. But what does that mean? That means we're going to trade underneath the 200-day long enough to cause the 200-day moving average to start to roll over and decline. So I think we might be able to, it depends on what the values are on daily closes and how fast that will happen. But the further down you are, especially if we were trading an 80 handle, that would roll that over much further. The projection is that it's going to roll over and do that. So that's kind of where it's at. Let's see a couple comments, and then we'll wrap up here. I'm over an hour. Yeah, I don't know if they're going to be fine. I know you probably own it and believe it and all that. This thing's not over yet. And since 22, they've levered up even more. So we'll see. Yeah, that's fine. We'll see. I've been joking with private friends that when Michael Saylor gets blown out, then you can buy all the Bitcoin you want. All right, I'm just looking through some comments. Bear with me a sec. Yeah. Who was it? My buddy Tom Lee, right? I saw that he has 3.8 billion unrealized losses right now on his books from that new deal he just started. So that's pretty funny. Imagine all those people got suckered into that. Hopefully no one here. Yeah, so Chief Daddy, what happened to the markets are going way higher? They are, just not right now. This is a minor correction. We're still above. All the trends are still in play, all that. So once again, it's funny. The internet's funny, especially, I've always been on, for the most part, the cutting or bleeding edge of everything. I've been doing AI since, what was it, basically we developed expert systems back in the 1990s. I'm still waiting for someone to figure out what I did with WaveTech. No one's figured it out yet. And I've had that business for 26, 27 years. I used to wait and somebody's going to figure out what I'm doing, have more money and do more. Well, we end up running $275 billion in that silly looking thing. It was fairly good, but yeah. So we'll see, because we don't. Your comment, and I appreciate where you're coming from, and I know those things are true what you're saying, but this thing's not over yet. We don't know where it's going. Let's see what he looks like at 84,000 or 79 if that happens. If these fib targets get satisfied, typically you can see over here where my cursor is. Hang on, let me make sure you can see. Oops. Now I lost it. Yeah, I lost where I was. Sorry. Chart spun and I lost my data point. But yeah, so we'll just see where this. Oh, here's what I was going to show you. The downward target here. Typically, we go to fib target 1 is almost a given when it happens. In this section here, we got down to fib target 3. We never reached it here. We haven't reached it in this sequence yet. And it looks like this is a daily, so it looks like we have some sort of potential bounce coming here mid-November. So we'll see. I think this thing is going to wash itself out. Whether we hit this number or not, I don't know. But I think if we get down to 93.6, that's probably going to be the point where we'll see some kind of bottom. But here's the other problem. There are trend characteristics, downward trends developing now. So we're no longer, so now you're going to sell the rips instead of buy the dips, right? And that will be the case until, maybe into, end of November. Maybe we can get a turn, but all of these moving averages that are set up here, this is daily. And let's go to weekly, and then we're going to call it quits here. I'll come up and talk to you folks for just a minute. But yeah, so if you look at this pattern, this is the other thing that's important to understand. We are in one of those volatility bubbles, I call them. It's just like I always reference this, like if you look at Bollinger Bands, it gets at literally a bubble. This one becomes more like a jagged. But what we need is the volatility has to continue to contract. That's probably going to take 6-8 weeks or more. And once we get that contracted, we'll be able to determine whether we're rallying back up to test the highs or if there's another leg down. So we don't know where that is right now. Okay, folks, come back up here. I appreciate uh, all of you guys coming up. Hopefully, this was helpful. I felt like it was the right thing to do. So, if you want the Substack, go to kindlereport.substack.com. 7-day free trial. It's $8 a month. There's actually 8 trade recommendations that come out of all the data sheets every night. And I'm working on something where we're going to put some stock portfolios together that you'll be able to subscribe to without getting WaveTech. I'm working on that project at the moment, so we'll let you know when that happens. Yeah, like I said, I will give somebody saying that, Tom Lee became a billionaire after that deal. Well, they just dropped $4 billion to make him a billion, so good for them. But yeah, I mean, good for him on the deal, right? That's what life's about. So I don't have a billion, he does. So I get it. I like Nadala. She said, you don't have to be a market maker. All you have to be close enough to Trump to know when he tweets someone opened a huge short position in crypto 30 minutes before the tweet on China tariffs. Yeah. Yeah. Yeah, who knows where that comes from, right? Yeah, I have, yeah. Like I said, my concern has been that the Trump bros and Saylor and all these guys, everybody that has a hedge fund. I'm spacing out some names; they're just not coming to me right now. But everybody was screaming, "Buy Bitcoin!" 114, trading 120, 114, buy, 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 buy. Meanwhile, it goes down. I saw some guy make a tweet on X, and he's like, "If all these guys are buying, how come it's going down?" I thought it was pretty funny. I think I won't be a conspiracy theorist at the moment, but I think somebody big is driving us down to reposition. So maybe even Mikey and the guys are the sellers here, and they're getting everybody to dump, and then they're just going to back up the truck. It seems very odd, I think, what's going on, especially with the patterns. But like I said here, I don't have the chart up right now, but that distribution that's been going on since going back to, probably July has been pretty obvious to me. I think the patterns, whenever you get and Bitcoin has its own patterns for the most part. Most of the flow of the money that goes in and out is fairly orthodox looking, but then occasionally it will get some different types of formations. One, the 24/7 never closing, and trading over the weekend. So you've kind of got a different flow that happens, and those flat. A lot of times the weekends will be quiet, not always, but a lot of times they will be, and that cash flow just changes the way things look. Let me look at the last comment or so here. No, I don't. I don't think it will either. No, I don't think Bitcoin's going to make a new high. It's not going to be 250,000. That's for sure. If it does, then wow, I'm impressed. Then it was manipulated. Somebody did something, right? Yeah, maybe so. I guess Spinola. I don't know I can't pronounce your name, but you know, I guess you know more than I do about Michael Saylor and where his panic point is. I think he's down 60% off the high. I haven't met too many guys that are feeling good after that, but it's possible. I always say there's only one reason why anybody closes a hedge fund is because it lost money. There's no reason to close it if you're making money. In Dalio's case, he stepped it aside, right? And I don't think I don't even know what Bridgewater does anymore. What their returns are, good, bad, or ugly, I don't know. Anyway, folks, thanks for showing up. Get the newsletter. You really should consider getting the indicators, kindlereport.com/indicators. and you can check them out. They're kind of been, I haven't done much with them, but I am, like I said, starting an educational channel. There'll be shorter videos, 10-minute videos, and I do have intentions of doing kind of a world tour, maybe next, coming into the spring, where we're going to do 3 cities in the U.S. Don't know which ones yet. And then I'm going to London, Frankfurt, Lugano, and Dubai. And that's probably about a 8 week tour. So I'll be on the road for a while when I do that. I'll be able to keep up most of everything. So anyway, I'll let you know if that happens, when it happens, and when it's validated. But I think it's going to be fun. And it's probably going to be a 2-day masterclass is what I'm doing. So I'm working on materials and just trying to set this up. So I'll make an official announcement when it comes real, but it's being plotted out as we speak. Anyway, thanks for watching. We'll talk to you soon. Things get crazy, I'll come back up, all right?
Photographic styles on. Tone,
hang on.
50. Warmth, 0.
Nice, my phone started, that was interesting. I touched my phone. Anyway, thanks a lot, and I will talk to you soon. Have a great evening. Yeah, hopefully you hear me. Yeah, Dalio's buying Bitcoin. That tells you everything you need to know. That's why it went down. Yeah, we knew Mandami was going to win New York, right? That's going to be a really interesting story.